All right, guys, welcome back to class. In the last class, I introduced us to divergence, and divergence is simply in a situation whereby we have opposite signs from the aggressors, opposite signs of coordinates from the aggressors and the passive. Okay, so which means the present move, the present momentum in the market, either price is selling presently or price is buying presently, is the aggressor, and that is the present trend of the market. So, and the passive is that high that has been formed or that low that has been formed. And I said it can even be a certain low that was formed already in London, and now you are in New York of the same day. That low is already passive. It is already visible. We can already see it. All right. So that is passive. That is passive means not active. All right. So there are a lot of things. They are pending order resting in London that people have actually placed that, okay, below this low, they want to say do a sell stop, they want to do a buy stop and whatnot. Okay. So that's already passive. Why the present trend is the aggressor. Okay. So we say that the coordinate of the passive. Okay. So the coordinates, why is this not? Okay. I don't know why it is not. Oh, white. Okay. So the coordinate, let's go to this. So the coordinate of the passive, so that is that high, this particular high that is already formed, they are the passive. So the coordinate of such passive, and then the coordinate of what comes to read is you see that this is a present move. All right. Even as it is you're reading it without forming swing guy first, you can already know its coordinates. So the present one and the what and the other one that is already there. So the coordinate of the passive and the coordinate of the present trend, which is the aggressor. So if they start diverging against each other, that is, let's say the coordinate of the passive is W minus D minus S plus, and then the aggressor shows W plus. From the moment even the highest volume OR, from the moment the highest volume OR show us that they have opposite sign, we already know that divergence has started. That is, price might reverse anytime soon. And what we are interested in is always this high, the low that is created, which is external, and we will talk about that in a minute. All right. So, and then we have this. So if we now later have full divergence here, that is, we have W plus D plus, and did I write S plus? If I wrote S plus, then this will be S minus, whereby all the aggressor and the passive, their signs, each of them is opposite to each other. Then we say that that is a full absorption, and we can anticipate a reversal. Okay, we can anticipate a reversal. So that is that. So now let's move to today's order of thing. Today we are more interested in the external and internal side of divergence, because that is the first way to group it before we go to we tend to look at exhaustion. So exhaustion is what we'll be talking about first. Exhaustion, absorption. Exhaustion, absorption. So what is exhaustion, absorption? Absorption. All right, so what basically is exhaustion, absorption? Exhaustion, absorption is simply a situation, all right, whereby we have full absorption that causes a reversal. That is, the passive limit orders are able to what? They are able to limit the effect of the aggressors. Remember, the aggressors are what? Are the present trend, which means presently, let's say aggressors are buying. the ability of the what? The passive orders to absorb all of the momentum of what? Of the passive, of the aggressors. That is, it is a case whereby passive absorb, so whereby passive absorb aggressors. Okay, so the present trend, let's say, for example, we have an, let's say we have an AOI here, then the liquidity engineered. Now, this present buy that is happening, these are the what? These are the aggressors. The passive, this is the liquidity engineered, all right? And this is our AOI here. So the moment price now reach this high, if these passive orders and the area where we can sell from are able to cause a reversal of the present trend is a buy. The old trend is a sell. So if they are able to cause the what? This reversal, they are able to cause it to happen, which means in the case of exhaustion absorption, passive liquidity is greater than aggressor's liquidity. That's the implication. That is it. We have explained it. Who are the aggressors? The aggressors are you and I. They are the present participant in the market, the present buyers and the present sellers in the market. Those are the what? Those are the passive. Those are the aggressors. The present participants, they are the aggressors. And who are the passive? The passive is your liquidity provider side of liquidity, which we have spoken about. So if passive orders, that is, if absorption as it is taking place is able to cause a reversal of the present trend, if the present trend is a pullback, if it is a major this thing or whatever, in as much they are able to cause a reversal of the present trend, that is exhaustion absorption. That right there is exhaustion absorption. So what is now, how does exhaustion absorption, how does it work? All right. The way exhaustion absorption works is that I've already established for you guys that a certain AOI or order block that price will use will always have a liquidity before it. So the question is now that liquidity just before your valid AOI, is it being absorbed? That is how you will know if this AOI will be valid or not. Is it being absorbed? All right. Is divergence happening between that passive high and the present trend, the aggressors? So how do we know if it is being absorbed? By virtue of, let's say, that the coordinate there is D minus S minus, and the aggressor is D plus S plus. That is, we have total divergence. D minus and D plus absorbing each other, S minus and S plus are absorbing each other. Therefore, we can anticipate at that particular AOI, we can anticipate a reversal. We can anticipate a reversal. So that is what? That is exhaustion absorption. That right there is exhaustion absorption, which is the one that causes what? That causes a full reversal of a present trend, of the present trend. That is, it limits the effect of what? Of the aggressors. That is, it is a case whereby passive orders are able to absorb the aggressors, the present trend. It is that simple. So the moment I now say the indication of it is usually through the biggest volume opening range. Here, the biggest one is daily. So if daily and daily already start absorbing, and maybe price has not given sessional, that is, price has not given sessional, then you can now wait for sessional to complete the absorption and for price to sell. But the major thing we know is that what is the highest volume over? Is it already diverging? Then when it is complete, we know that that is a complete auction, and then we can look forward to what? A valid AOI above the high that is being absorbed. Above the high that is being absorbed. Because that high that is being absorbed is the one, that particular market maker that is staying at this AOI or at this other block, it is that particular liquidity. It means that that is the liquidity it wants to use to activate or to mitigate its loss before price continue its initial trend or before price reverses. All right. So that is what? That is absorption. That right there is absorption. All right. So that is exhaustion, absorption. So now we'll now take a step further. We'll now talk about the external and internal absorption. The external and internal absorption. Now listen very well. Their difference is very simple. Their difference is very simple. So external absorption, I would like to define that. External absorption or divergence. External divergence or absorption is a situation whereby price absorbs, whereby price absorbs, whereby price absorbs, whereby price absorbs in order to continue, the passive, emphasis on passive, in order to continue the passive trend, emphasis on passive. So external divergence or absorption is a situation whereby, sorry, there is even a mistake here, whereby price absorbs in order to continue the passive what? The passive trend. Emphasis on passive. Whereby price, we have, in order to continue the passive trend. All right. So now what is exhaustion, absorption? What is internal divergence? Internal divergence. So that is external divergence or absorption. So this is internal divergence or absorption. This is a situation. This is a situation whereby price absorbs to continue the aggressive trend. Price absorbs to continue the aggressive trend. Okay, so internal divergence or absorption, this is a situation whereby price absorbs to continue aggressive what? Aggressive trend. So that is the situation of internal divergence. That is the situation of internal divergence. So now let's look at examples of both and let's try to understand what we are talking about. All right, so basically, let's say we have this. So let's say we have this. We have a high, a low, higher high, higher low, higher, higher low, higher high. All right. Now, this is the normal trend. Then price now starts reversing. And we now have this. All right. These two are actually kind of interchanging. They are actually working hand in hand. None is independent of the other. None is independent of the other. When there is internal absorption, automatically it will relate with passive. Where there is external is relate with this is just to understand what we are trying to talk about that will make the difference. So now the one in red, that is our present trend, that is a sell. How do we know it is our present trend? Because obviously price has not raided the external liquidity of the initial trend. So the initial trend is our passive in this particular scenario. All right, so how do we say external happens? External, therefore, is a situation whereby, let's say we have an AOI here, meaning that this particular low is the liquidity, is the potential liquidity rather, before the AOI. That particular low is the potential liquidity before the AOI. So external simply means that since this particular low leads to this high externally, whereby, you know, at the high, this is our external liquidity at the high. All right, this is why you guys were, this is why I sent structure video also to the group. If you remember the first day of the boot camp, I went ahead to still send structure video, at least be able to identify structure. That is what we use structure for, just for identification. Know when I say this is external liquidity, know what I mean by external liquidity. All right, so that's why that video was sent. So don't think it is completely useless. Okay, so now this low here externally causes the break of structure of the external liquidity. That is, we're having higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So this low that is being absorbed is what creates the higher high. Therefore, if absorption happens here, it is an external absorption. Why? Because this low creates this external liquidity, is what leads us to the external liquidity. That is what leads us to the external liquidity. Okay, so this low leads us to this external liquidity. Hence, if absorption happens here, that is, let's say we have D minus S plus, and we have D plus S minus, full absorption. It means that if we are buying here, the external liquidity is our target. That is the implication, because it is external absorption that is happening. The low that leads to the external liquidity is what is being absorbed. Hence, the target is also the external what? The external liquidity. That is the target. External, it leads to the external. That is it. That move is what leads to the what? To the external liquidity. It can be more than one. That is, we could have it this. All right. And then we could have present trend coming here. Even if it is this low that is being absorbed, this low right here is still what leads us all the way, higher, higher, low, higher, higher, low. It still contributes to what leads us to the what? To the peak, to the external. So this being absorbed is a reversal for the external liquidity as the target. That is the implication. So that is what we mean by external absorption. So what happened here is what? External absorption. That's what happened there. So what happened there is external absorption. Is that understood? So let's now take a look at internal absorption. Same example. I will use the same example so that we can get the picture. So let's take a look at this. Let's say at this low right here, we have D minus S plus. All right. And at this low here, look at it, we have D plus S plus. Okay. I think I will need to redraw this so that we can have a bigger picture. So this is it. So we have here, and we now have the aggressors. Now look at this clearly. At this low that is being absorbed, no, it is not being absorbed, we don't know yet. So we have, let's say, D minus S plus. And here we have D plus S plus. Now we have this aggressor here. Even though all of these are aggressor, but of course, this present trend, this immediate one that breaks this low, is also an aggressor internally to this particular low that it breaks. So let's now say the coordinate of the aggressor that we have here is D minus S minus. What did you notice here? The highest volume OR is not diverging for the external. Don't forget, this low is what leads us to the external. This simply means that absorption is not happening for this external. It is not. Absorption is not happening for the external. What price is diverging against, therefore, is what? Is this. Is the internal. Okay, that is this particular low. And which high does this low create? This low creates this high. But in this case, this particular low creates what? Creates up to the external liquidity. That is the difference. So this low here creates this high. That is the high it creates. But here, this particular low creates this high. So what price is diverging against is this high, not the external liquidity. So here, we can look for a reversal trade and take our buy. But what is our target? This. So that is why we call it internal divergence. That is a divergence that happens between the aggressors. All that trend is still aggressor. But inside aggressor, we still have more aggressor. That is the fractal nature of price. Inside aggressor, we still have another aggressor. So it is this guy, which price is diverging against the high that is formed. That is the one price is going for. So that is our internal divergence. So which means externally price is not diverging. Price not absorbing this particular low here. Price not absorbing this particular low here. Show us that what? We are still bearish. That is, what is the bearish trend here? The bearish trend is the aggressor's trend. The one in red is the aggressor's trend. It means that the aggressor's trend still continue in as much what we have here is not a full absorption. Even if the D minus D plus, all right, even if they diverge and the lower one has not been complete, let's say it remain weekly, it remain daily, it is still possible for price to shift and come and take the internal first if the internal is already complete. Okay, so the internal divergence is what? Is this. So internal simply means the aggressor's trend. So which means the aggressors are still in control. And as this buy you're anticipating is just a pullback because of this. And this alone is not limited to this. This alone helps us in a lot of ways to now know the right liquidity price is seeking generally, especially internally, whereby price want to continue structure. Okay, this is why you will know that the case of premium and discount is very relative and it is very subjective. It is very relative and it is very subjective. Why is it relative and subjective? For example, I could have something like this. All right. It might even seem like a nice order block. I could have this, and this might seem like so let's say I have this aggressor trend. So let's look at this. Look at what is happening here. So let's say, for example, I have something like this. Based on our external, let's say we have W minus D plus S minus. And here we have at this low, this present low that is rated here, let's say we have just even. So this low here, let's say we even have just D minus. That is, okay. Let's say we still have W minus. Sorry. Okay. So let's say we have at this low, we have W minus. That is what raised that low, W minus D D minus S minus. That is the aggressor. So basically, let's say here we now have, maybe this is the opening of a new week. Here we now have W plus. Let's say we have D plus S minus. Okay, so look at this. For example, look at this. Here, this W minus and W minus already show us that price is not diverging. That is what it shows with the external. That is because this swing is what creates this external liquidity. Is what leads to that external liquidity. Price is not diverging. Let's say here, what we have is also W plus D plus S minus. Look at what I'm talking about. The aggressor that reached this low is also W plus. And this is also W plus. But the aggressor that read this particular one is W minus. Hence, the question is, what is our available liquidity internally? Because externally, of course, we know that price is still bearish and the aggressor trend will continue. So obviously, what this guy is diverging against is this high. So this is our available what? Liquidity. Please, do we get that? Please, do we understand that? Okay, Missy, what is not clear there? Missy, what part of it is not clear? What part of it is not clear, Missy? Missy said she's not clear. Recap from where? I've said a lot of things here. I've started this class since. Why the second W plus no liquidity? Because the aggressor that read it, this is the aggressor that read it. The aggressor that read it is not against it. That is why it is not liquidity. Except if this and this fully mitigate each other, but I have not taught you that one. We can have cases whereby this and this fully mitigate each other. But the moment they do not mitigate each other clearly, as we have seen right here, then obviously the aggressor that read you is what determines if you are being diverged against. So if the aggressor that read you, because this low here, the high it creates is this. That is why it is called internal. That is the high it creates. This low here is not the one that created this now, isn't it? This is the low that created this. And the aggressor that read it is not diverging against it. So obviously it is not available, except if they mitigate each other. That is when, so which I will talk about in a minute. From the liquidity price 6. I really don't know where to start from. Missy, I really don't know where to start from, please. Please, I would like you to be more clear about your question. Like Mr. Saga asked now, he asked why the second one is not liquidity. Okay, you have gotten it already. Okay, all right, thank you. So we can proceed. So majorly, what price is diverging against is this high. Is this high because this low creates this high. The only condition whereby this internal divergence can go all the way here before continuation is if this range and this range mitigate each other. And I will give you an example of that very soon. And also I will give you an example of that on chart. Is that understood? So that's basically it. So this external show us that price is continuing downward. The question now is, okay, if I'm to buy, I want to take an anti-trend trade. The question is, where should I buy against? That is the question. Where should I buy against? So if price is showing you that, okay, this high is the one that is available based on the aggressor that read it, then that is what you are buying against. Is that understood? So let's look at another case whereby it is very possible for both of them to be rated. So let's say, for example, I have something like this. I have this, I have this present trend. Okay. I have this present trend. So after this present trend, we now have this. Oh, sorry, I said present trend, passive trend. Then we now have this particular scenario. All right. Okay. So let's say we have this AOI, and then we now have price clear this, and then we have this, and we now have another one here. And we now have this. Now look at this. So look at this. We have externally here. Okay, it can actually happen at the external liquidity as well. Let me even use this as external liquidity. That is, your aggressors might have raided this. Of course, for a complete reversal, they might have even raided all of this. This might start from here. Your aggressors might have raided this external liquidity. The question is still that this swing low is still what leads us to this high. So that is still your external divergence if price fully absorb it. So let's say, for example, here now we have D plus S minus, and here we also have D plus, and we have S. It can even be, this can even be a bigger distance actually. Don't think they will always be the same coordinate. This right there might be bigger. That is, we could have externally here, we could have W minus D minus, and also here we can have W minus, okay? But inside here, you can have intraday, okay? Maybe it is here that another week just opened. All of this can still be within the same week, all right? So very possible. So we now have W minus, D plus. Let me even write still S minus. So let's say here we have D, let's say here we have D minus, all right? So D minus S plus. And here we now have D minus, look at it, look, D minus, maybe S minus. Let me make this to be S plus. Now look at this. We have D minus and we have D minus. Okay, understood. So we have D minus and we have D minus. How do you know if they mitigate each other? That is what I want to teach you. How do you know if it is possible price to raid both of them together? Now, apart from your naked eyes, you know, the whole idea of HORC is for you to take out anything like maybe you are using your eyes to know mitigation, you are using just your eyes to know liquidity. That is the whole picture. Now, look at this. Even though full absorption does not start here initially, but look at what happened here. S plus from here and S minus from here are diverging. That is the sign that will validate for you if price wants to absorb further up to this high. One of its elements must diverge with this other one. That is, this move here is the aggressor to this low. But yes, fine, the major OR there did not diverge. That is very fine, and that is very good. Now, but look at one of its elements here. S plus and S minus is already diverging. All right, is already diverging. Therefore, when we have a full divergence, now we are now have this aggressor, which is an aggressor to this particular passive. Okay, if this now give us as it has given us, remember this W minus is just to show continuation for the external, but we are interested in other elements of this aggressor, which is D plus and S plus, and which therefore is a what? What is it? Is a full divergence. It is a full divergence of the what? Of the last passive that is rated. Okay, so in this case, price will what? Will buy, and it will go ahead to rate this inclusively. Why? Number one, the AOI here has been mitigated as proven. Okay, number two, one of its elements diverged, but it is the lower element. Hence, this aggressor fully diverging with its own low will not just rate this, even though this will be your first take profit, will also rate this along with it before continuation. Okay, so that is the case whereby we have that. So now we have established what external divergence looks like, and we have established what internal divergence looks like. Internal is simply when externally divergence is not yet complete, and internally divergence is complete. So you know the available liquidity. And that liquidity is what I was saying when I was teaching AOI. That is the one I said it lets you validate your AOI. Okay, by the time we'll be talking about momentum absorption, I don't want to teach momentum absorption tonight. It will be too much. Momentum absorption is a little bit technical, and that is the only part. Once we are done with momentum absorption, we're actually done with this boot camp. That is the truth. HPO theory is just one class, and it is very direct. I can finish HPO theory in 15 minutes. I can finish it in 15 minutes. Okay, I can finish the HPO theory in 15 minutes. HPO theory is very direct. It's a very direct thing. Okay, so our last major class is actually tomorrow, where I'll be teaching. And of course, you don't even expect to grasp everything once. You need your practice, and also you need the live trading session. All right, that is why we do live trading session. That is where you keep mastering and keep getting understanding. So don't think, oh, this bootcamp is everything. So why then is their mentorship? If this bootcamp is everything and you just start making money on your own. No. So the more you see me applying it in live market, the more you have confidence in it, and the more you get to understand it better. All right, so that is why it is mentorship and not just courses, videos. Okay, so exhaustion, absorption, that is everything about exhaustion, absorption. Now I said something when I was teaching AOI. I said that your valid AOI is not just by the AOI that looks unmitigated, even okay, that AOI breaks structure and it is unmitigated. Yes, that's fine, that's cool. But when there is much volatility, that is what causes much more imbalance. Remember that volatility and imbalance are relatively the same. So when there is much volatility, and that is why you will see that if most people that trade SMC and that are very profitable, if they show you their data, you see that most of them don't trade news. Why don't they trade news? Because news causes volatility. And if you don't understand true liquidity and whatnot, you can't trade news. You can't. So your true liquidity, your liquidity will always work based on SMC level for the basics. That is why you see that they always avoid news. But when you are trading high impact news, you know during high impact news, the imbalance, there is a lot of imbalance that can occur. Remember what we said. We say that what imbalance is a situation whereby what the effect of the passive is being limited. That is, passive areas are being violated. That AOI that looks interesting and fresh, you see price violating it anyhow. That means that process is the process of imbalance. Violation of an area of interest, of an area that price ought to actually mitigate. That is imbalance. But it is an opposite to absorption. Absorption is now when passive orders are greater than what? Than aggressor. Imbalance is when aggressors are greater than passive. That is, they are violating it. Okay, that is, they are limiting the effect of the passive. But in the case of absorption, it is the passive. It is other way around. So that is why we say absorption is liquidity. That is liquidity. Okay, why imbalance is not liquidity? Imbalance is volatility. Is that understood? And volatility and liquidity are inversely proportional. The higher the volatility, the lesser the whatever and all that. So that is basically how it works. Okay, so I said something that an AOI that will be valid, that is, if I have a certain AOI here, let's say I have multiple AOI that looks valid. The question is, an AOI can even be as liquidity. That is it. And that is what divergence lets you know. So let's say, for example, at this particular low here, price is already diverging internally. Let's say externally, we know that price wants to continue downward. But now the question is, which AOI of these two will price use? Oh, it is very simple. The question is, this particular one here is price diverging against it. That is, let's say we have D minus, S minus, and you now have the aggressor that readies to be D plus, could also even be S minus. Maybe you are now waiting for the sessional to finally confluence with it to take the trade. If this is the case, then whatever buy that you are buying here, okay, is towards where? Is towards this guy. That is it. It is towards this eye, rather. That is it. So which means this AOI will be violated before your sell happens. And therefore, the valid AOI above will be the one to be mitigated. Why? Because it is the market maker that stays here that is actually calling price towards itself. Okay? That is the one that is calling price towards itself. That is how you identify true liquidity. True liquidity is not by your naked eyes. It is by understanding which of this area is calling price, which AOI is calling price towards itself. It is possible at times that both of them will call price towards themselves. So that is what we call buy-side inefficiency, sell-side imbalance. Sell-side, not ICTO now, but just based on understanding. So for example, let's say this is D minus S. Series shut up. So let's say, for example, this right here, let's say this is another day now. Price went ahead and go to, let's say, another day. Is that understood? So let's say the value here is D minus S. Look at this. So D. So let's say here, this particular one is D minus S minus this one here. Sorry. Pay attention to what I want to say here. Pay attention to what I want to say here. So let's say, for example, this is D minus S minus, and the aggressor that read it is D plus, but S minus, that is sessional, is not complete. And now a new day now opens. Let's say here, right here, is a new day. Okay. And we now have something like this. So a new day opens. And what that new day gives is, let's say, D minus, look at it, D minus S plus. A new day opened, and it gives us here a new day open, and it gives us D minus S plus. What did you notice here? Even though here has given us S plus, that is complete for maybe what is happening here. But the fact that this particular liquidity is available, okay, this particular liquidity is available based on price, and this one give a complete divergence immediately, that is D plus S minus, D minus S plus. It is very possible, look at it, it might now be that same deal. Price might go first here, use this AOI because it is fresh and because a liquidity is actually engineered towards it. A liquidity is actually engineered towards it. And don't forget, the AOI that we said is calling this, they do not even mitigate each other. So that's really cool. It simply means that what price wants to do in that scenario is that this particular one that gives immediate full divergence with this particular low could what? Could diverge against this first. Then the question is, how will you know if that is true? What you will notice that will happen there is that immediately price rate this guy, this particular one, price will do an immediate full divergence again. Which means, let's say this I here is D plus it can even be another high that formed this, actually very possible. So that is another sessional high. So let's say this is D plus S plus. And what's now come to read it is D minus S minus. If price should do immediately, in as much as is a valid AOI, and that one also used this particular high, it uses this particular high to call price to itself. And when price now read it, price does what? Price does a full absorption immediately for it. That is to tell you that price wants to what? First create a lower low again. At least price will create a lower low. Then before, that same day that can now start a buy. That same particular last day that's already presents the S plus that is missing here can now start the buy that will start now coming towards this particular high. All these things are simple. You just need to rewatch the video over and over again. It is still the same thing we are talking about. I'm just trying to show different cases. I don't even need to tell you this particular one. You will always know. The major thing you need to understand is your absorption. Of course, if you see absorption here and you see a valued AOI above it, you should know that you should sell. You should know that you should sell. So all of these things are actually simple. All right, they're actually simple. Okay, so and they are very direct. So you just need to what? You just need to watch the video, practice, and of course, attend live session to get your understanding. So, and that is everything about absorb what? Internal and external absorption. That is everything actually about exhaustion, absorption. So the next one we'll be talking about tomorrow, whereby we'll be rounding off on everything. In fact, it might be that tomorrow that I will also teach HPO3 so that I can round off this bootcamp already. So that is the one we'll be talking about. So look at this here. Look at this particular example. Yeah, this low here is, we are still within the same month. We're still within March. So this low here is W minus, that is the highest OR there. And the aggressor that came to raid is also W minus. So I don't need to show the other one, ETC. That's why I put ETC. So in that case, what happens? We say that price already, that means that is showing us that price still want to continue downward. But look at the internal here. Here was W plus. All right, price opened as a sell OR here. This is the open of the week. And it flipped to a buy here. So buyers take the high and they take the low. You can go and use that as your assignment. And look at that. It's still a recent PA on EU. Just go to 4-hour time frame. You will easily see this particular structure. All right. So price now. So the price now, here we have W plus. So here, the only thing missing was that this day was D minus, and this particular day also was D minus, but it was W minus. This one opened as a buy OR and flipped to a sell OR here. So it was D minus, D minus. That's why that buy did not start that day. Okay. So here has already shown us continuation, that we are still going that one. But here, what happened here is internal absorption. Because full absorption happened here, we have W plus and we have W minus. So we just waited for the second day, which now give D plus. That is what we waited for. So D was the major thing that was missing here. So we waited for the second day, which gave us the D plus, and then we took the buy. In fact, that buy, people posted it on my Twitter. I spoke about this particular thing in the video I released on Twitter, was a day before yesterday. I actually spoke about this particular example. FOMC, I've been there before. FOMC happened around here, and it just pushed price more to my direction. So that is internal absorption. And of course, this low creates this high. So that is your target. So that is internal what? That is internal absorption that we have been talking about. Okay, so it can be sessional too. Don't even deceive yourself. Don't think here now we have a same day. All right, same day. This is this day, and this is also that same day that is still raiding each other. Now we are in London. So London diverged against Frankfurt. I think London was a buy. Yes, London was a buy, and yes, London was a buy or Frankfurt was a sell. So it was London that came to raid this low. And this low is what leads to this high. So this low is from Frankfurt. This impulse is from London. So they diverge against each other. And after HPO3 counting, which we'll talk more on, what happened, this buy started in the same London, as you can see. The buy started in the same London. We are still within the same day, same OR. Okay, price is not diverging. Of course, the day did not flip. And so price is not diverging against this high. So the only thing price is diverging against internally is the what? Is where we have that internal divergence. And immediately price raised it a little. Price continue its price action. So London was still the one that started that same buy. So that is what? That is internal divergence. We'll go to momentum absorption, but before that, let me show you more example on chart before I round off the class. So I will share my chart screen now. All right. So I will share my chart screen now. This particular buy, I don't expect the sale to continue. That's why I did not even bother myself today. Price will probably just trap people. I still expect this high as liquidity, even if price will continue. And it is still based on this same internal divergence, because this is what is calling price. The wholesale that happened here, like I said, it is very possible this one also, price called it. That's why price used it. And where is price selling to? Price is just maybe selling to this particular low. The whole thing that is calling price is actually this high. And I will show you guys that one as the final example. But let's first deal with some example here before we do this. So let's first see this particular area here. Why is it that is the available liquidity we marked during our live session last week as what price is targeting? All right. So as what price is targeting. So let's see why is it that I need to go very soon. So why is it that we have that? Let me see. Hopefully our network will help us. So here, this low was formed in London. No, sorry. This high is London open. Yes, it was actually this low. So this low was formed in Frankfurt. All right, Frankfurt is open is 7 a.m. while London open by 8 a.m. Okay, so Frankfurt open, let's check. What is the opening range of Frankfurt? I'm coming. A minute, please. So let's go to 1 minute time frame. So let's go to 1 minute time frame. So let's check Frankfurt. Let's check Frankfurt open. 7 a.m. So Frankfurt open as a sell OR. Price sold first, as you can see, this momentum candle. Price keep clearing the low first. It didn't even clear the high or met the target. So price keep going down. Then let's now come to London. London open here. Can you see 8 a.m.? This is 8:00. And London was a buy open range. So which means at this low, who are there? S what? S minus from Frankfurt. This is 758. London has not opened then. Then London opened as a buy. All right. And it is the same London. They clear the high, they clear the low, still being sponsored by buyers. So it is buyers that are here. And meanwhile, don't forget this low is what leads to the creation of this high. That is internal divergence. So which means that what? This high is being what? Is being called. So this is the reason why that high was available as true liquidity. If it was when I see many people doing that mistake, or even one of you here that I want, though because she is new, she still followed her plan and still try to sell at this particular range as a valid order block or something. But I told her since Tuesday that we ended the call that price will rate that high. She didn't listen. So, but that is fine because she is new. But of course, when she herself see exactly that price went for that high. So that's why this high was called on Tuesday. If you are on Tuesday call last week, I told you we are looking for a buy and we are targeting exactly this high on Tuesday. So let's see. That since Tuesday started a buy, and I told you guys that you can easily be trapped. And this is the case whereby I told you that it is very possible price can what? Obey. Price can obey this first. Let me do this thing. But that does not mean price will not come to that liquidity. So look at it. On Tuesday was when we had our call. Of course, our live session is usually Tuesday. But it's very possible. I told you categorically in the live call. I told you, hope you realize that this thing, you can easily get trapped here. That full absorption is already happening at this high. I said it on Tuesday if you were in class. That full absorption is happening at this high. But based on HPO3 day 1, day 2, day 3, I still knew that the buy will probably start towards our major liquidity prices targeting. I knew it would start. So on Tuesday, full absorption happened here. That's why I was telling you that a valid AOI, there was a certain valid AOI, a very clean AOI that wasn't mitigated. So that one also called price towards itself. This AOI here, yes. This particular, anytime you have a momentum candle, you have momentum candle here in balance, momentum candle in balance here, I told you, you keep checking your left. So when you check your left, you will see this neat AOI that did what? That leads to the break of all this key level, this low, this low, this low, from this same AOI. So that is a valid, properly unmitigated area of interest. All right, unmitigated area of interest. What did you see? That is exactly, so full absorption started here. This place was, I think, D minus, S minus. And this particular day opened as a buy, cleared the high, cleared the low, met the target. And exactly here we have D plus, S plus. D plus, S plus, exactly. So full absorption. So that is to tell you price still want to sell one more time. That's what I was trying to explain in my last statement during the explanation, so that this will be your clue. The moment you still see that there is a full absorption, that is to tell you that price wants to go lower. In fact, you can have this in a bigger sense. So that's why I say you don't need to cram anything. Your major focus should actually be your ability to coordinate. I told you coordinate should be something that for the next 1 month, you are still practicing and trying to get correction on. Coordinate. After coordinate, just know that if you have full absorption, all right, even if it seems full absorption is happening at the low, but if another full absorption happens at the high here, it simply means that price might still want to sell one more time or might still want to buy one more time. Very, very important warning. Full absorption is not something you want to take as for granted. Okay, so this low high obviously is what lead all the way to this external liquidity. So if full absorption is happening here, where is the target? Obviously the external liquidity. Obviously. So it shows you that price still want to sell one more time to the external liquidity. That is what it is telling you. The moment full absorption happened at this high, and immediately price rate that, of course, our buy started towards where? Towards exactly the high that we said is available. All right? That particular person sold here. But it is fine because you guys are still new. But you will see, except if you don't even know what you are doing, the moment you see a concept like this, you should know that this probably is your missing piece. It's just the reality. This probably should be your missing piece to everything that you might be missing from where you are coming from. That is just the reality. So full absorption happened. That's why that, and immediately that was met. And we have a what? We have that. And of course, full absorption happened here too. Don't forget, I told you guys this particular open day. So go and check all these days. Go and use it as practice yourself. 1 minute can still reach here. This day opened as a buy. Opening range. It cleared the high. They cleared the low. They made the target. And this low, exactly this low, is what? Is the flip point. So which means that this low was D plus. And now they flip to sellers. So that is what we call self-flip or self-divergence. Okay? The moment a certain highest OR diverge against itself immediately.